fact, let's stick it with the financial sector and let's welcome on board Girish Kousgi, the MD and CEO at PNB Housing Finance as well, joining in on the show right now. Mr. Kousgi, great to have you on ET now. Wanted to understand about the momentum in the real estate, which is clearly continued now. Several launches which are expected as well in the first half. How is it that it's translating into traction for your loan book?
Morning. I think if you look at the industry, both real estate and housing per se, I think it's doing pretty well for last over a couple of years. And this will continue for next at least 5 to 7 years time. And with lot of focus from central government and state government, I think various state governments have come out with a lot of innovative schemes. And there's a lot of thrust on housing, especially on the affordable and especially housing in some of the big cities. So I think keeping all this in mind, trend is going to be really, very good for next few years.
There seems to be a lot of, I won't use the word war, but there seems to be a very different terrain when it comes to the entire HFC or the home loan market. SBI has become extremely aggressive. You got, NBFCs like yours who are giving now loans at a very attractive price. At a time when everybody is fighting for liability and the interest rate in the HFC space is very competitive, how do you see the terrain moving?
So if you look at entire retail space, I think housing is one asset class where the scale could be to any extent without much of risk. So I think recently there were reports that unsecured within retail had increased, significantly, and obviously, it comes with the additional risk. And therefore, I think all the banks, all the institutions, non-bank, be it NBFC or HFC, there's a lot of focus on housing because the risk in housing is predominantly less when compared to obviously most of the unsecured products. And with the entire real estate space doing well, housing doing well, there's bound to be a little bit of competition. But this competition is not new. It's been there for last 3 to 4 decades, and this would continue. But having said that, there's enough space for new players to get in, existing players to penetrate and try to increase their share.
How do you see the entire liability franchise for HFCs moving at a time when interest rates, they are not likely to go higher, but they will not come down, which means that if I look at the wholesale borrowing market, that has not gone down. But in terms of the trajectory seems to have topped out.
In fact, if you see now, we have seen very recently that the rates had peaked. There was almost close to about 250 bips increase in PLR. And now we have moved to a stage where we will see more of consolidation as far as the interest rates are concerned. So I think this is the best time for non-bank companies to really try and grow the book profitably. And we see that after a few quarters, rates might start coming down. So this is the best time. Demand is quite good. Number two, there's a lot of focus from everyone. And number three, the rates have peaked and now it has reached a consolidation stage. If you look at the rates, what we have now, and if you compare with the rates pre-COVID, it is still quite reasonable. And in fact, this would ensure that all the companies would do well and also would be able to make good profits.
Be sticking by with your guidance of 17 to 18%, or would you up that?
No, I think we would stick to our guidance. We had guided disbursement growth of 22+% and book growth of 17 to 18%. I think as a company, there has been a lot of transformation since last few quarters. And you've been seeing, for last few quarters, how the company has transformed. Today, if you see, our focus is it's more on retail and corporate is degrowing. I think it is as per plan. So I think our strategy would continue, our guidance would continue for this year.
Could you also give us a little bit color on, the trends that you're witnessing in your loan book as to how the prime segment and how the affordable housing segment are both shaping up?
See, if you look at home loan segment, there are basically four segments: super prime, prime, affordable income, and affordable assessment based. I think in last, let's say over 12 months or so, affordable has seen a little dip in demand, but I think that is, in the affordable assessment segment, not in the affordable income based. Now, as PNB Housing, we largely focus on prime and affordable income base. So I think these two segments have witnessed significant increase in demand, and this would continue. Even the super prime is doing pretty well. Affordable assessment, obviously, given the structure, because it's more of assessment, the dependency is more on assessment rather than income documents, and therefore the ability of any given organization to grow this book would be a challenge beyond a particular point. So I think this is where we've seen bit of less demand, but even this is short term. I think now it is slowly picking up. So overall, as a housing industry, all segments are doing pretty well.
What about the competition facing from banks? How is that shaping up? Is that impacting business?
See, there is competition. I think competition would intensify in quarter 3 and quarter 4 because the year would come to an end. Obviously, H2 would be more intense in terms of competition. But having said that, this has been there since many, many years, over 3 to 4 decades. So competition is something which is quite normal. We saw only abnormal competition, during and immediately after COVID. I think we have not seen that kind of competition in last 2.5 years. And I'm sure going forward in the normal course of business, when the economy is growing, we would not witness that kind of competition. Otherwise, generally in quarter 3 and quarter 4, there'll be a lot of price, mainly in terms of price competition. But I think since we cater to a different segment altogether, I think we'll be able to stick to our guidance. And even the market is doing well. Most of the companies in this space will do well with I think compared to other products, within the overall retail.
Appreciate your time. Thanks much for joining in and sharing with us that outlook. Let's also bring on board then the management of Brigade Enterprises. Lots to talk